Hi everyone, today we're talking about CVS Health Corp, and we're talking about this stock because I actually considered buying into this stock, and I'm going to tell you a few things that kind of changed my decision slightly as I go through this video. But the reason why we're talking about this stock is because it's on a 33% discount, and it's kind of like, it's been on a long kind of discount for quite a few years. It's been going down quite a lot. But recently it's definitely had quite of a sharp drop, and whenever these sharp drop happens, these are normally a good time to get into the stock, and I considered getting into the stock. And kind of the whole healthcare in general, the kind of health stocks have been struggling quite a bit recently, and I thought maybe this is a good time to get into that sector because in my portfolio I currently have no healthcare stocks in it. So I considered quite a few of these and have a look into into which one I should invest in. And I have chosen one which I'll be making a video about probably later this week, because I'm going to probably buy the shares this week into that stock, which I'm not going to say just yet, but if you watch the channel quite a bit you probably have a good idea who it is. And this is one of the stocks I considered, so I've done quite a deep dive into this stock, so I'm going to be putting a lot more information onto you, unlike I normally do, because I normally can just do like a brief overview of the company. But because I nearly bought into this company, I've done quite a deep dive into the company itself, so I've got a lot of information, so this video might be a bit longer than the normal videos that I do. So if you don't know what CVS Health Corp is, it's pretty much a retailer that's in kind of the pharmaceutical side of it. Like I say, a lot of these stocks have took a massive beating recently, and this is one of them. We're going to go through a couple of positives, negatives, some of the fundamentals, and then I'm going to give my opinion on the company itself. So, when we look into CVS Health Corp, we'll go through the positives first, and the big thing is that it's a big dividend play really compared to a lot of them. When we look at a stock like Walgreens, CVS actually has a better dividend yield than them. Theirs is 3.7%, which is quite a high one in that sector overall. So you get quite a big dividend on them play, and also the stock is slightly cheaper as well than what Walgreens is. Another great positive of CVS Health Corp is that the US healthcare spending is set to rise 5.5% year over year. So it's not like a sector that's struggling at all. It's a sector where it's still growing, and that's a really good thing, getting into a sector that's still growing. If you're getting into a company where the sector's kind of dying, then the company that you invest in normally struggles, obviously. But with the health sector still growing quite a bit, that's positive for CVS going forward, and they should continue to grow. So it's in kind of a good industry overall. So the negative side of it overall, the CVS negative side, is that gross margins are being hit heavy, and this is kind of a common theme in the industry overall, but especially CVS's are being hit quite heavy. We've seen their gross margin side drop from over the last 5 years from 21% down to 16%, and this is also one reason why the stock is down 33%, is because of the actual CEO coming out and saying, look, we are struggling a little bit with these gross margins. Going forward, we see us struggling still, and that kind of made investors go, whoa, this isn't good, I'm going to sell my shares. And it's kind of happened in a lot of companies. I was listening to Walgreens as well, and Walgreens said exactly the same thing, that going forward a lot of the gross margins will be hit because there's a lot of pressure to keep the prices down. So that's something to be careful of. And probably the biggest thing that actually brought CVS down was the balance sheet. Now the balance sheet isn't in a good position. It's probably one of the worst balance sheets I've actually read for a while. The reason why is because they just took a lot of debt on, and this debt is over a long period. The long period is, I think, it's about 7 years, and normally we would expect something around this over 3 years, and that is because they've purchased the company, which is called, I'm going to hopefully say it right, it's Anita Health, I think it is. But they purchased them, and a lot of analysts have come out and said that they believe that they've overpaid for this, causing them to take on a lot of debt, which will cause a lot of problems for the company. So the balance sheet ain't great because a lot of debt outweighs a lot of the assets that the company has, and it's over a long period of time. Now another thing that you got to be careful of is the positives that I put down here is because of taking on this company and buying it, and the dividend yield being pretty good, and over the last kind of few years, the dividend's been raised 20%. One of the negative side is that we could see this dividend not actually get raised as much now, because of the balance sheet being a little bit negative. It won't get cut because we still have CVS Corp Health growing, but because of the debt of the balance sheet, we could maybe not see that 20% increase that we have seen over the last few years, and that's probably a knock-on effect that we've got to be careful of overall. Fundamental side of it, the P is pretty healthy, it's 12 PE. EPS side of it is really good at 21%. And sales is forecast to go up at 4.3%. So when we look at the fundamentals of the company, the P, the EPS side of it, the sales side of it, the growth's pretty decent overall. Obviously the sales, I would like it to be slightly higher, but that fundamental side of it's pretty good. So kind of get to my overall opinion on CVS Health Corp. I think that you're looking at this one as a dividend play. It still has a good PE and a nice growth and a dividend play, and it's on a discount, which is really good in a good sector. It's a good dividend play, but I think that because of the balance sheet and some of the problems, if you're getting into this for a dividend, and that dividend could get affected over the next few years because of the balance sheet, that kind of puts me off the stock. I feel like there's a better stock in that sector that I'd rather invest in, which I'll talk about when I buy some shares in, and I'll make a video about it, which stock it is I bought. But for me, I think it could affect the dividend side of it, and I don't want to get into a stock where the main reason I'm getting in is because of the dividend play side of it as well. So yeah, that puts me off the stock slightly. But I still think it's a good time to buy into this stock. Like if I was to rate this stock, I would say it as a buy. I just feel for me that there's a better stock that I can purchase. But if you were a fan of CVS Health Corp and you were looking at a discount to get into, or dip to get into, this is a pretty good dip, because overall the company's still in a decent position because of the growth side of it, and that they will eventually pay off the debt for buying this company out, and you'll have a nice dividend play right there. But I just feel like there's a stock that will do better over the next few years than these guys. And like I say, I'll make a video about them when I buy the shares, which I should buy into that stock this week at some point. So that's the video today, guys, talking about CVS Health Corp. I hope I gave some information that is useful to you if you're looking at buying into the stock or just interested in learning about the stock. Thanks for watching, guys. Thanks for all the support recently. It's been amazing. The subscriber count just keeps going up at the moment. It's really good, so thank you for that. Give the video a like, subscribe, and I'll see you in the next video.